am I correct? You're sticking with NVIDIA and the like?
That's right, Kelly. I don't know if NVIDIA necessarily is the top pick, but absolutely, I think you've got to stick with the momentum winners in this market. There's all the reason to believe in quality and growth going forward for sure.
So broaden that out for me. It's the Mag 7. I can choose to love it or leave it, and you think I should keep it in the portfolio?
Yeah, Kelly, I think there's a lot of differentiation between the names that are in the Mag 7. And when you look at the Alphabets, the Microsofts, the Amazons of the world, these are high quality names. These are names that are generating tens of billions of dollars of free cash flow per year that are going to be investing upwards of $200 billion just into artificial intelligence over the next year. So there's a big opportunity set going forward. And when you look at the consistent growth that they deliver, these are the names that you want to have to stabilize your portfolio and to keep up with the benchmark. But in addition to that, what I tell a lot of our clients is that when you even look and broaden out beyond the Magnificent Seven and a lot of the big momentum names that are working, there's a lot beneath the surface that is in fact doing well. It just gets skewed because dispersion is so high across the average stock. But when you look across some of the industrials complex, when you look across some utilities, you look across financial services, there's a lot of companies within that are working. So I tell clients to don't chase the market higher, leverage downside opportunistically, but lean into these parts of the market that are not as widely owned as the Magnificent Seven while still holding on to those key quality growth names going forward.
You like the big banks.
Yeah, I think the big banks make a lot of sense because it's clear that the economy is, I think a soft landing is a very good way to describe it. The consumer's not falling off of a cliff. Growth is softening. It's softening back towards trend, which I think is a very important distinction to make than kind of the doom and gloom narratives that might be out there. And you're still seeing general consumer indicators strong. Mortgage books are still okay. You're not seeing losses across a lot of them. Even credit card providers, the ones that are more exposed to your lower income, higher risk consumers, they're still doing okay. And so I think the big banks have leverage to a lot of different parts of the economy. And with investment banking and M&A starting to come back, especially if rates do start to come down, my base case is for a December cut, I think you're going to see that provide more of an inflection point for the earnings going forward. And valuations, Kelly, still look really, really fair. So that's a part of the market that I think looks very attractive.